Hey everybody, I hope everybody is doing well. I wanted to give a quick update for all of you here that is trying to figure out what just happened this week. I got a lot of texts, and I think most of you are trying to digest the information and how the market react. Um, there are um, a lot of moving items. So why don't I just jump right into what I am seeing and what I think what I think you should be on the lookout for. Okay. Okay. So why don't we start with um, I can just get this out of the way. Why don't we start with the overall picture? So what we have here, if you can see, what I have here is the price of S&P 500. I marked three lines. One of them is the start of the Iran war. Another one is when the CPI came out last week, or yeah, a little over a week ago, and what the federal decision just did a few days ago. Okay. Long story short, I mean, a couple of days ago. So long story short, we were supposed to have a relief rally. I'm gonna mark it. It is right around this candle right here. Okay. And this relief rally was supposed to be giving us the trend up, and it were moving up. Okay. But then there is a news of the war coming. And as a result, the market started going crazy. Yeah. And when the market started going crazy like that, the market started, anticipating and trying to figure out what does the war mean, because this war does not make sense to everybody, to anybody, to general public. So in if you really look at the presidential approval rating, and you look at the politicians and their the uh, politic what do you call it political news, and the truth behind what is really going on is that the general public does not want another war, especially with Iran. It's the wrong thing. We have enough problem on our hand. We do not need to destroy other nations, especially Iran, when they already agree to dismantle all of their or majority or their nuclear armament. Okay, so prior to the war, there was a negotiation, and Iran basically gave America everything that America demanded, including giving up nuclear for war purposes, so weaponizing nuclear weapon. But we invaded Iran anyway. And what happened since then is market uncertainty starts creeping in, because oil price spikes up and down. Okay, so I can actually trace the oil price against the movement of the S&P 500, and you will see there is a direct correlation between the oil price going up and the market going down. It's going up, market going down. Okay, we'll talk about that later on. So let's finish the chart first and figure out what can we do here. What do we see? What we see is lower lows and lower highs. Okay, but it is kind of predictable. Okay, so this is what lower lows. Okay, it keeps forming these lower lows, and at the same time, it keeps forming these lower highs. Okay, so it's very, very predictable. The pattern is very predictable. Okay, and this is because when the market takes a step back, the retail traders tend to overreact. And when they overreact, what they do is they drive the market down irrationally. So a lot of the time, market correction is basically just overreaction. Okay, and so it pulls, yeah, pull the market back up once people kind of settle down a little bit. All right, so the news play a major part, and the social media as well as a tweet from Trump plays a major part on the economy and what is going on with our stock market and crypto market. Okay, so what is really so having said that, there are a couple of things that will be obvious. in the next few days and weeks is that the market will bounce up or bounce back up. Okay, so it'll go and continue and have these funky patterns of up, going up, follow the blue line, going down. Okay, it keeps forming lower highs, lower lows, lower highs, lower lows. Okay, until the end of March, going into April. That is when there are that is when we do not know what's going to happen. Why is that? Well, it's because we have a CPI result that came out it on March 11th, okay, and the CPI index was not good, but that was not the trigger point. The trigger point was a couple of days ago when the Reserve looked at the producer price index, and they realized that it is not looking good. It's not looking good. So they're in a rock and hard place because the way inflation is with oil price up, if they're not careful, they can if they cut interest rate too much, we can go into an economic condition called stagflation. Stagflation is very hard to get out of. It's basically a very, very bad situation. Okay. And April is when we are going to get the March CPI. Okay, remember the CPI Consumer Price Index is always 1 month behind. So what we're seeing, what we've been getting this month is only data from February. In April, we are going to see data from March. And what will happen very likely is that it is going to reflect how bad the real situation. Okay, so so it is very likely that we're going to hit some very critical. It is going to be a critical juncture. It is very likely that we're going to continue to see this downtrend. But there are two scenarios. We know that Condoleezza Rice, the foreign secretary, she is one of the best diplomat there is, was called in to Trump administration. As you know, she has been the one that helped the Obama and the Biden administration negotiate peace treaties basically. So she's been called in. She's on the team. So there is very likely there's a likelihood that the Iran war will stop. There is a likelihood of that happening. Okay, so they're negotiating the deals. Trump loves to make a deal. We know that, and I think Condoleezza Rice being called in is one of the proof. So if we look at the stock fear and greed index, okay, we are currently at extreme fear. What does extreme fear means? Okay, extreme fear is we've been on extreme fear for a couple of weeks now. A month ago, we had a fear index of 44. Things were looking fine, but now with oil price spiking up, everybody is basically afraid. Now, this is the behavior of extreme fear investors. Okay, when the fear and greed index is on extreme fear, usually um, people sell at a loss to keep as much cash as possible, and there's a reason why. This indicator typically signals that there will be buying opportunities in the future when the market reaches the bottom. All right. So institution, smart money people, everybody is taking profit when they see it. So during extreme fear situation, environment, everybody, whenever they see profit, they take it. Whenever they see profit, they take it. And what do they do with that profit? They don't reinvest it back. They keep it as cash. They keep it as cash to be ready to buy at the dip because when buying at the bottom is how you make generational wealth. It is not a secret. Everybody knows that that's how you get rich. You get rich not during the bull market, but really during what you do at the bear during the bear market. Okay, how you position yourself during the bear market is how you're going to succeed. So, having said that, all of those sell-off that's been going on, they're basically now became just cash waiting on the sideline, waiting to see what happens. But they do not know which direction things are gonna go. Okay, And the same thing here with crypto. Crypto is a little more predictable. But the fear and greed index is still pretty high. Okay, there is fear is still pretty high. And so what we're seeing is crypto is and gold actually became the de facto places to invest. Okay, Bitcoin being one of them. I have a list here of how the top 20 coins are doing. They're for the most part doing okay, comparative to the stock market. All right, and we shouldn't be surprised by that because we know everything is transitioning to the digital economy. All right, so and when we look at the trajectory of Bitcoin, for example, or digital asset as a whole, everything is moving on chain now. Okay, from Nasdaq going to 24 hours, 24/7, to stocks being tokenized, stable coins being the legislature passing the stable coin act, the Genius is it the Genius Act? No, it's the Clarity Act, and then hopefully we'll have the Genius Act soon enough. But long story short, Bitcoin, Ethereum, XRP, Solana, Hyperliquid, my favorite, token there. Monero, Canton CC, that was one of the gem that I thought I hope you guys took advantage of. Sui is another one that looks pretty decent, but a lot of these tokens are basically looking pretty decent. Am I saying you should invest your money on it right now? No, because it is not altcoin season yet. Okay. Um, Not everything is going to go up. It's going to take time for everything to go up. So you can invest on some of the coins that you believe will go up, but ultimately at the end of the day, uh, I would rather you focus on just one or two coins, maybe like Bitcoin and XRP or Bitcoin and Ethereum. You always need some Ethereum to pay gas or Solana. Solana is also the infrastructure that a lot of the tokens are being made of. That is my preference. I use Hyperliquid to trade. So typically I collect Hyperliquid, Bittensor, Tau, um, a Tether, Ethereum, and Solana. I don't collect XRP necessarily. Maybe if the price is right. But right now, I'm not a big buyer of any of the other alt tokens other than Bitcoin. The price is just not there yet. And I think it can go down a little. It's going to go down a little more before we see the true bottom and altcoins starting. So I'm not a buyer at Bitcoin today. It's at $70,000. I'm not a buyer of the most of these altcoins. The only altcoins again that I bought are the ones I use, like Hyperliquid. I trade on Hyperliquid, so I keep Hyperliquid token. TAO, or BitTensor is a token that is used for AI. I've been collecting it for forever. Solana is I always use it for gas, for when I buy tokens or create NFT, and Ethereum, as you know, you have to use it to pay gas. So depending on what your strategy is, some people love XRP, which is related to banking. That is fine. There's nothing wrong with XRP. I love XRP. But ultimately, at the end of the day, the key here is to understand that we are not at the bottom, and there is very likelihood that you're going to lose money if you do not know what you're doing, buying all these other coins. But the only thing that we're certain of is that Bitcoin is going to is already outperforming US dollar in terms of its staying power as a store of value. Okay, is equivalent to gold basically. Does that mean you need to buy all the Bitcoins you can right now? Well, depends. How much do you have? How much money do you have? Only invest in crypto money that you can lose, right? So if you only have $2,000 and you can only put in additional the $100 every week, then let it so. But if you have $10,000 and you can put in $1,000 every week, then go ahead. By all means. I know I saw a question about gold, and I am not going to talk too deeply about gold, but ultimately, at the end of the day, at the current price, I am buying a little more gold. the idea here is gold is a hedge. Okay, it's an insurance. You don't. It is not something that you buy and sell, buy and sell, buy and sell, buy and sell as a money making thing. Um, you want to sell some at the very top when the price is overheated, right? It reaches 5,500. You definitely want to buy some. Right now it's 4,500. I'm looking to buy, maybe closer to 4,000. Um, and I'm gonna keep it for a long period of time because gold is a very certain is a traditional asset that majority people and countries are currently continuing to accumulate. So I'm not afraid that the price of gold will eventually come back up. Whatever fluctuation you see in the time being, if you feel like you do not have enough, you should consider buying into as gold price goes down. So let's look at what the practicals are here. Let's look at the situation. Okay, why is it that people do not know what April is gonna be? Because there are really two scenarios: either oil going up or oil going down. Okay, so I make it very simple here. Okay, so when oil goes up, inflation fear goes up. It doesn't necessarily mean inflation is there. Just the fear alone is enough when oil goes up. And if it continues to go up, we're at the $100 level. And if Brent doesn't go down and remain at 85, 75, and it stays at that, at that triple digit level, uh, the inflation fear is always going to be there. And the Fed had issued a statement that, we're in a tough spot. We're not going to cut the rate. So we're looking at potentially no interest rate cut this year, and that is what we call hawkish. Hawkish is a very bad thing because it sucks out liquidity. It doesn't provide liquidity to banks. Interest rate goes up means the dollar goes up, DXY, right? And when DXY goes up, everything else goes down. Stock goes down, crypto goes down. Okay, it's very typical. Well, why, it doesn't make sense. Well, why is that? Well, because when the dollar is strong, nobody wants to wants to import our stuff, right? As a result, the companies stop making as many goods, and as a result of that, our GDP goes down, and it is a vicious cycle because then the dollar goes up even more. And now what ended up happening is factory are losing profit, okay? Because nobody wants to buy our goods because they're too expensive. And unfortunately, for us, that means if you hold your in stock and crypto, any high beta assets, you're gonna get decimated. If you're in gold, um, if you're in gold or commodities like oil itself, then you're going to be fine. You're making tons of money. As a matter of fact, one of the strategy here is if oil trends sideways, you might want to think about switching from trading or holding good oil like USO. The index is USO, United States Oil. It's you're holding United States Oil. Why don't you hold Chevron? Shell, Philip 76, ExxonMobil, because ultimately the gas stations are the one who's going to profit the most, right? Okay. One thing that you need to be aware of also in this market, especially right now, because there's so much uncertainty, we do not know what's going to happen next. Okay. The market sentiment changes. The speed at which they react are exponential, much, much faster than the past. So everything that you think you know about the stock market and how the economy work in the past, toss it out, toss it out, toss it out to the I am don't throw the baby with the bathwater. But what I'm trying to say is be open-minded that this is a new game. We're in a new era, digital era transition. We've never gone through it. Okay, and it is better and the best play oftentimes is to take profit when you see it. Okay, do not wait. There is no reason to wait. These companies do not have no value, have no loyalty to the shareholders. um, And why should we have loyalty to the company? They have no loyalties to us. They manipulate the stock prices by buying stocks back just to increase their stock price so that they can get you to buy into the hype and only to then enrich themselves by selling those stocks that they bought behind the executive as the company buy more stocks, the executives are actually selling their stocks for profit. So who is the fool that gets stuck um, with the garbage? Well, unfortunately, retail traders. So retail traders are starting to get smarter, and they decided, you know what? Whenever I see any stock that I'm holding that is in profit, I'm gonna go and take profit as soon as I see it. Okay, and that is why you see what happened today. Great companies, a lot of great companies, um, still went down significantly. Energy companies was impacted quite significantly. Why? Gold was impacted significantly. Why? It is because take profit. They basically decided, you know what? Whatever profit we get, we're just gonna take. If I bet on the stock, or I decided to bet on something and it goes up, I'm gonna take profit. Okay, and I'm going to put it as cash on the side so that I can buy what I want at the very bottom. Everybody is thinking, not everybody, but the consensus is we know that the economy is overheated and correction will happen. How deep it is, we do not know, but everybody is getting ready to buy at the bottom. Okay. Scenario B is when oil price goes down. Assume the diplomats and Trump and the new whoever over at Iran decided to declare peace. Inflation will go down. Fed easing is possible only because they're still in a very difficult situation right now. The debt level is at all-time high, guys. And it is very difficult to adjust interest rate or print too much money. The Fed do quantitative easing. The Fed is afraid of stagflation, right? They have dual mandate of taking care of the people, but also controlling interest rate. Right now, they're kind of like stuck. So they're waiting. They're also waiting to see what the numbers look like. In April, because of the war. They want to know what the CPI looks like, the PPI looks like, what the GDP looks like in March. Okay, in April, based on the March numbers. Um, but if oil does go down, then interest rate go down, which means dollar is going to go down. Now, if dollar goes down, we're going to see a spike up. Okay, we know now that in this environment, in today's environment, it is not one of those flat price gonna stay flat for a very, very long time and it's going to be fine. No, it's gonna be volatile. Okay. And it's volatile when the minute they know oil goes down, the spike up is going to be huge. Just like the spike down was huge. This week alone, $1.5 trillion was wiped out. If you haven't opened your 401k, opened it. Open it. Don't be surprised if you lose 15-20% on your 401k, depending on what strategy you're in. Okay. But let's go to the next one. Give me a second here. I think my dog is going crazy on me. Okay, so no doggy anymore. Let's just jump to the next one so that you know exactly what to do based on your age. Okay. So here is the key. Your age matters. Where you're at in life right now matters. Okay. I spoke to a friend of mine who is in the AI industry, and they basically say they're trying to figure out the human genome, and figure out which one is the one that causes us to age. And they think they'll be able to find it within 5 years with the help of AI, specifically, the AI that is specifically um, made for biogenetic, right? Genome bioengineering and genome. genomics or something like that. It's a new field basically. But long story short, you need to stay you want to stay alive long enough until they figure out which gene it is, because they can then come in and fix that gene and keep you living longer, right? They can learn from turtles, and we know for a fact that in the Old Testament during the Bible, people live to be a very long time. Methuselah lives to over 900 years old. And at some point, evolution or what have you, I do not know what the reason is. We just don't live that long. But long story short, human life used to be very long. It's not just 100 years. It used to be 1,000 years. I get to see, many generations down. Um, but long story short, let's get back to the real issue here, okay? If you're watching this and you're at the age of over 55, or you're in your 50s, okay, you're approaching your retirement age, you have the fixed income coming, you have a 401 IRA and 401k, double check it. I'm pretty sure it's down. All right. You need to really be cautious here, and review the funds that you're in and adjust accordingly. Okay, because um, if you if AI does not figure out which gene is going to help you live longer, then you might have a problem in during your retirement. Okay, because you don't have the time for the compounding and weather the down cycle. You might get stuck with a living standard that you do not want. So now is the time to act. Do not wait until it is the bottom, because it might take if it takes if it bounces up very quickly, then you're fine. But what if it doesn't bounce up quickly and things got worse? We more wars happen and craziness that we do not know what's going to happen. But crazy things happening. Um, but if you're in your 30s and 40s, um, what you want to do here is to increase your cash position. Do anything and everything you can. Cash, cash, cash. You wanna, you can weather the storm. This down cycle is not a problem. As a matter of fact, you are going to be the front and center, the next generation of leaders in this digital economy. But you need to have a lot of as much dry powder as you can muster to deploy at the bottom of the market, because the gap between the rich and the poor are becoming so wide that if you don't position yourself, you will have zero chance of getting out of the downtrend. If you're at in your 20s and 30s, I'm sorry to tell you, but this is a very tough time, and I understand. You don't have much to begin with. If you just graduated college, you probably have a big debt unless you have a scholarship. And so, what I would recommend is you spend the money that you have to really, really figure out what is it that you like and start improving yourself. When learn, okay? Pick a new skill, something that you're interested in, perhaps. So, here is the key: your age matters. Where you're at in life right now matters. Okay? I spoke to a friend of mine who is in the AI industry, and they basically said they're trying to figure out the human genome, and figure out which one is the one that causes us to age. And they think they'll be able to find it within 5 years with the help of AI, specifically, the AI that is specifically made for biogenetic, right? Genome bioengineering and genome genomics or something like that. It's a new field basically. But long story short, you need to stay you want to stay alive long enough until they figure out which gene it is, because they can then come in and fix that gene and keep you living longer, right? They can learn from turtles, and we know for a fact that in the Old Testament during the Bible, people live to be a very long time. Methuselah lived to over 900 years old. And at some point, evolution or what have you, I do not know what the reason is. We just don't live that long. But long story short, human life used to be very long. It's not just 100 years. It used to be 1,000 years. I get to see, many generations down. Um, but long story short, let's get back to the real issue here, okay? If you're watching this and you're at the age of over 55, or you're in your 50s, okay, you're approaching your retirement age, you have to fix it, income coming, you have a 401 IRA and 401k, double check it. I'm pretty sure it's down. All right. You need to really be cautious here, and review the funds that you're in and adjust accordingly. Okay, because um, if you if AI does not figure out which gene is going to help you live longer, then you might have a problem in during your retirement. Okay, because you don't have the time for the compounding and weather the down cycle. You might get stuck with a living standard that you do not want. So now is the time to act. Do not wait until it is the bottom because it might take if it takes if it bounces up very quickly, then you're fine. But what if it doesn't bounce up quickly and things got worse? We more wars happen and craziness that we do not know what's going to happen. But crazy things happening. Um, but if you're in your 30s and 40s, um, what you want to do here is to increase your cash position to anything and everything you can. Cash, cash, cash. You wanna, you can weather the storm. This down cycle is not a problem. As a matter of fact, you are going to be the front and center, the next generation of leaders in this digital economy. But you need to have a lot of as much dry powder as you can muster to deploy at the bottom of the market because the gap between the rich and the poor are becoming so wide that if you don't position yourself, you will have zero chance of getting out of the downtrend. If you're at in your 20s and 30s, I'm sorry to tell you, but this is a very tough time, and I understand. You don't have much to begin with. If you just graduated college, you probably have a big debt unless you have a scholarship. And so, what I would recommend is you spend the money that you have to really, really figure out what is it that you like and start improving yourself. When learn, okay, pick a new skill, something that you're interested in, perhaps. And you want to do it outside of the traditional higher education college system because the traditional college system, except for one or two, maybe, are actually broken. When you really think about it, they're just social clubs. And if you go to a random university, I do not know, pick any online university, they're for-profit organization with outdated curriculum that only cares about enrollment. They don't really care about you. They care about profit. They care about making sure that the what do you call that, their administration make money. They get endowment funds. But opening a college is one of the best business strategy these days. That's why there are so many online courses, online colleges, because it's free money. Government pays for it, help pay for it, you pay for it. So by the end of the day, if you go to traditional college system that is dysfunctional, what you end up with, unless you have a scholarship, is you'll graduate with a piece of paper. You cannot find a job anywhere because the entry level job requires 5 years of experience, which is kind of oxymoronic, right? Entry level job, but you need 5 years of experience. How are you going to get 5 years of experience if it is entry level job, right? It's supposed to be entry level, means zero experience, but that is what it is. They want 5 years of experience for entry level job. So you have this graduate piece of paper that is basically of little use to you, that costed you at least $100,000, $150,000, $300,000. So you begin your life already down in the negative. So the best thing you do actually is to take that $300,000 and start a business. Use it as a seed fund to start a business. Do something that you like, or invest in digital assets. Call your dad and say, "Dad, save the money. I wanna go to trade school. Maybe I wanna learn a skill. I wanna learn a specific skill." I mean, when you ask the top AI in the world, they say that the jobs that will last replaced by AI will be things like plumbers, tool and die makers, believe it or not, welders. Those are going to be the people that is going to still have jobs at the end of the day. Because AI is going to be so advanced, okay? And they are doing amazing things already. Even though the ones that you and I have, they're very limited in their capabilities and can be very stupid at times. But the ones that the actual AI built for specific purpose, such as health in the health sector or in the finance sector or in the mathematics or physics sector, are actually very good. And unfortunately, we do not know what those AIs are doing. So, having said that, I think I know this is not the most um, encouraging video, but I want you to at least understand what is happening. Okay? Um, you don't want to wait to react. Okay? You don't want to react. Reacting would be late. Okay? Just understand that things are moving much faster, and you need to adjust your um, mentality quickly, accordingly, so that you don't get left behind. Oftentimes, people say, well, this is just another situation. We've been through it, like the internet age, or the industrial age in England, or the real estate bubble, or whatever. We've been through this before, but trust me, guys, this time is different. This time is different. This is not something that we've known, or we know. Anybody that tells you they can predict what will happen in 2030 with certainty, I can tell you that they're lying, because every expert, whether they are in the AI industry, whether they're an economist, whether they are in politics, they all cannot see beyond 2030. This program is meant to end in 2030, because I myself could not predict what will happen after that. Um, but stay strong, stay tuned, and pray a lot. I'm sure God will take care of us. Have a good one. I'll see you on the next video.